It's really interesting to experience Gibraltar. That's one of the craziest airports I've seen in the world, right? That's a really interesting experience, crossing the border. I missed my plane and I had to come into Malaga, cross the border and cross the airplane. And I'm glad that I had that experience because on the way, I went into one of the petrol stations. And in the petrol station, I thought that I'd buy some water. And when I bought some water, I saw this really interesting sign at the airport, at the center, the shop, and it said, "We don't accept British pounds, but we accept the Gibraltar pound." And there was a cross across the British pound, and there was a tick against the Gibraltar pound. And I didn't have any Gibraltar pounds with me. I only had some Manx pounds. And some British pounds, but I didn't have a Gibraltar pound. And so what I ended up doing was paying by card. And when I paid by card, it actually highlighted to me some of the importance of understanding what is actually happening with our money in the background. Because what actually happened in that transaction is the local government said to me, we do not accept currency created by the British government. But we do accept currency created by the British banks. And so I ended up paying with a digital currency called the digital GBP. And the digital GBP is not by any government. It's actually created by the private banking sector. And for me to make that transaction, for me to actually spend that digital currency called the digital GBP, somebody else had to go into debt for that money to exist. Because every single digital GBP in the world is backed by somebody else being in debt. And so we find ourselves in this really interesting turning point in the history of money. Now, yesterday I was listening to many of the talks, and it's very easy to get caught up in the regulatory environment. What I'd like to cover in my talk today is, yes, the importance of the regulatory environment as crypto takes this turning point in life and in the history of this sector. And I'm going to go through some of the history of this sector that led to where we are today and some of the things and the turning points that I was involved with. But it's important to also realize that that regulated sector are the same bastards that actually created Bitcoin and that wouldn't allow Bitcoin to be created in the first place, and has now created this force that keeps governments all around the world more honest. And so it's important to accept the yin and yang of this industry. As we adjust to regulations, as centralized companies, we need to adjust, but we also need to remember the roots of this industry and the roots that actually keep governments and our monetary systems all around the world more honest, because remember, somebody needs to regulate the regulator. And I believe decentralized currencies and decentralized asset classes and decentralized exchanges keep regulators, governments, and centralized institutions more honest. Because now there's competition between doing it the regulated way and doing it the unregulated way. And we have never had that before. So please remember that both sides of this industry are equally as important, because we need to remember that we also need to regulate the regulator. And so what I'd like to do today is I'm going to go through some of the history and some forecasts for where we go from here and how this industry actually came to be. We're at a fascinating time in the history of the world where this little social experiment called Bitcoin is actually creating competition for the dollar, for Wall Street, and Silicon Valley, and some of the most largest entrenched interests in the world. And we're right at the beginning of that right now. And so I'd like to share some of those, how we actually got here. I have a tendency to overspeak, and I try to pack a lot into this. So for those of you, that's my Twitter account, and if you tweet me, I'll send you some more videos on some of the content that I've done more recently, that I'm not going to be able to cover here today, because there's so much happening in our industry right now. So for those of you that don't know me, there was a brief introduction to me. I was working in investment banking in 2006, and I took it upon myself to leave the industry and return to some of the things that were bothering me. I spoke at the very first Bitcoin conference in the world in 2011, and I gave a talk on the difference between Bitcoin and banking and the impact that might have. I wrote the first published book in the world that included Bitcoin, and I'll go through some of the companies and things that I've invested in since. So here's me in 2006. I was working for a bank called KBC on the London Stock Exchange, doing very similar things to what we're seeing in the ICO token market today. I was a market maker for London Stock Exchange AIM stocks, which were subject to many pump and dumps and low liquidity in stock market movements. And I decided to move into corporate finance, and I was helping people do IPOs and raise finance on the AIM market in the UK. And in 2006, I just decided that there's got to be more to life than sitting in front of these screens trying to make banks money. And so I decided that I wanted to leave, and I threw in the corporate towel and started returning to some things that I was very passionate about, which was I studied economics up to master's level, and I disagreed with everything that I learned in economics in many of the different thoughts, because all of them, with the exception of Austrian economics a little bit, but had too much focus on gold, had forgot to actually, all the models that we run our economies on today operate off an incorrect assumption about how money is actually created. I'm not going to go deep into that today, but just to give you a very brief overview, and then you can tweet me and I'll send you some more videos if you're interested in the subject. But I identified three things, and that was what the subject of the book that I later wrote, Bank to the Future, was about. That when you deposit your money at a bank, the bank becomes the legal owner of your money. When you own Bitcoin, you are the legal owner of it. When you deposit your money at a bank, they spend the money as they wish. With Bitcoin, you spend it in a peer-to-peer network because you're allowed to own it for the first time since cash. And finally, traditional money has a monetary policy that rewards you for taking on debt and punishes you for savings. The Bitcoin monetary policy, in the long term, if it succeeds, allows you to be rewarded for saving and punishes you for taking on debt. And those yin and yang, those opposing forces, have become really important in the economy today. In 2007, I wanted to tell everyone about the problems with money. I remember I was taught in economics that bank is an intermediary between borrower and lender. No, they're not, because they don't need your money to be an intermediary between borrower and lender. I remember later they told me about this thing called a multiplier effect, and the multiplier effect stated that if you circulate money more and banks are able to multiply the money that the central bank creates, and you try and influence it with interest rates, then the banks create this larger money supply and governments can control that. Well, it turns out this thing called fractional reserve banking actually doesn't exist. People thought that fractional reserve banking was a bit of a scam at the time. When I told them about it in 2007, nobody would listen. Everybody thought it was just rubbish. It needed Bitcoin to be created for people to actually believe that banks create digital currency, the digital version of the currency that you see. In 2007, I literally stood outside the government in Westminster here, trying to get people with my wife here to actually pay any interest in the money and what's actually about to happen. And so this was in 2007. But suddenly we had this financial crisis and people suddenly became more interested. And then people were hearing things like fractional reserve, and for the financial crisis and the entire economics industry, the governments all around the world missed the point. And they did not solve the financial crisis, they just solved the problem of the financial crisis with more of the problem by creating more debt-based money in order to perpetuate the Ponzi scheme of our traditional money supply. And in 2008, when the financial crisis happened, I'm a little bit slimmer here, you'll notice, people actually started to get interested. I could actually attract an audience, and people were actually interested in the message. And when I was telling people, by the way, there's this thing called fractional reserve, but by the way, there's no fraction and there's no reserve. Banks can actually just create as much money as their appetite to take on debt, And if they want to get around the reserve requirements, they just go to an investment bank and they take their debt products and they package it into something that they sell to you via a pension fund manager that's meant to be investing your money. And therefore, they can get around any reserve requirements and there's no fractions needed. And therefore, they can balloon the money supply just as much as there are willing borrowers. And now they're not even attached to the borrowers because they can actually just package it and sell it to you via your pension, which is what we saw in the financial crisis. More and more people were receptive to the message. In 2009, they interviewed me for this documentary called 97% Owned, and suddenly it got 2 million views on this completely boring topic that no one gave a shit about before, discussing how money is actually created and the impact that that's going to have on our economy. In 2010, I decided to put all that into a book and work on a business. And I founded a company called BnkToTheFuture. And I wrote a book called BnkToTheFuture. And this was really a collection of all the blogs and things that I had written before that. And it was the very first book in the world that included, a published book that included Bitcoin. And we were discussing some of the forces there. At that time, Bitcoin was absolutely doomed to fail, highly unlikely. You go to the first Bitcoin conference, there was about 20 people in the room. 10 of them were diehard computer scientists that could not communicate a message for shit, but were very passionate about what they were doing. The other half were diehard activists that wanted to take down the government and believed that the financial crisis was the fraudulent thing, was actually going to be the catalyst for this new money that you could own, you could spend, and rewarded people for savings rather than debt and worked without them. I had no idea that Bitcoin, whether it would succeed. And in 2010, I just wanted to fund and support this industry. So we founded a platform called BnkToTheFuture.com. We were at the UK. We were based in the UK at the time. My wife and myself co-founded this platform. And we spent 4 years lobbying regulators to allow people to invest in private equity online. I didn't tell them that it was just financial innovation and fintech and this stuff. But we were just trying to get it so that people could invest online. Now, because of our focus, because of my history, there was 3 companies at the time in the UK that invented what was called the equity crowdfunding industry. We were one of them, but we were delayed by 4 years because, I believe, of our thoughts about banking and monetary system and the entrenched interests in there. But in 2010, we founded BnkToTheFuture, and it was an online investment platform that allowed people to invest in private equity online. And we wanted to focus on facilitating the disruption of the traditional financial markets and funding some of the innovation and businesses that were working on that vision and mission. And equity crowdfunding was born at this point. In 2011, I spoke at Occupy London here. And then I spoke there. That's the very first Bitcoin conference in the world. And at that conference, there was a little startup pitching called BitPay by a guy called Tony Gallippi. The price of Bitcoin crashed from $30 to $3, 90% retraction. How's that? There's the very first Bitcoin conference. And I gave this presentation on the difference between Bitcoin and banking and the importance of Bitcoin as a mechanism for keeping governments more honest with their currencies in the future. Suddenly in 2012, people were inviting me. Max Kaiser was at the conference. He invited me on the Kaiser Report. And all around the world, all the CNBC invited me on to speak about Bitcoin and these Bitcoin debit cards and all these companies that we were investing in at the time and what the industry was doing. And suddenly mainstream was actually interested. It was a real shocker to the system. Then in 2013, I got invited to TED, and at TED, I gave a presentation on the fraudulent nature of traditional money and why this is important. And then in 2014, I gave a presentation stating that ICOs would be bigger than IPOs on TED. All of the YouTubes here. At that time, I'd invested in the very first ICO, which was Mastercoin. And that essentially was trying to do what Ethereum later did, but for Bitcoin. And then we invested in MadeSafe and Storj and some of the very first token sales. We could not believe it when MadeSafe raised, I think if I remember correctly, $5 million via an ICO. that existed completely outside of the traditional financial system. It was at that point when I gave this talk and forecasted that ICOs would become bigger than the IPO market. And it was all happening in this decentralized way, which was fascinating. So at BnkToTheFuture, we decided to really just focus on just funding the Bitcoin industry. There was no blockchain industry. There was no crypto industry. These words didn't exist. We invested in the Ethereum ICO on the side, but through our platform, we were just decided to focus exclusively on this industry. By 2016, we'd invested in some of the biggest and most valuable companies in the industry today. The seed rounds for all of these companies, part of it was done through BnkToTheFuture or for our direct investments. Bitfinex, BitPay, Kraken, Shapeshift, BitPayzer, Exodus, Bitstamp, Bitso, and Uphold, and many other companies in the industry. At the same time, we were being disrupted by this token industry at the same time as our traditional equity industry. So what we were doing as a strategy, we decided that we're going to invest in much of the decentralization so that no matter what happens, we're okay. And we created a regulated environment. We spent, at this point, 6 years working on global international financial regulations for securities laws and integrating with over 40 different jurisdictions because we knew that in the future, securities laws compliance on a global scale was going to be important. And so we started going through all these different jurisdictions, creating custom onboarding process and compliance with local securities laws, and at this point we had to move from the UK. The UK would only allow us, when we were first registered with the FCA, to work with UK businesses and UK investors. Useless. You know, you could get a fish and chip shop funded by UK businesses and UK investors under some tax breaks and tax schemes, but Bitcoin was global. This was a global vision, a global mission. And so while the ICO market was really starting to froth up and grow, we were working on the regulations because we knew at some point either this decentralized industry is going to disrupt regulations, I doubt it, and governments are going to stop caring about AML and KYC and all the things that are important to them today, and consumer protections and investor protections and the things that they're meant to be working on, or they're going to really care about those things, and therefore we need a compliant way of being able to do this stuff. And so we started, when we did our first tokens through the platform, we did it via an investment contract whereby you had to the contract was a security, but the token didn't lose some of its properties of being a utility, so that it could still float on the crypto exchanges. Later, things like CoinList came along, and the SAFT came along, and popularized that whole model. By 2017, we decided that the regulatory environment was safe enough for us as a centralized company to do our own token sale. And so we launched the BF token in order to try and solve some of the big problems that we were experiencing on our platform. The three things that we had a problem with is that firstly, we were fighting for investors to fight into some of these most valuable companies today because no one really got this industry. But all of a sudden, as people became extremely wealthy through Bitcoin, and then they invested in the Ethereum ICO and became very wealthy through Ethereum, and then they started to redistribute some of that wealth into the ICO markets. We went up to about 65,000 high net worth investors by the judgment of their local jurisdiction. And suddenly we had pretty much most of the investors in the industry that were on the platform. And so therefore, whenever we launched a deal, it would just sell out really fast. And so we had to create a membership token whereby people that had the token deposited on the platform, they got priority access to deals, or they got deals that were not going to be open to anyone else but our token holders. We were also experiencing real challenges. So when we originally started, we knew every deal in the industry. There was only a few deals every 3 months or so. But all of a sudden, it went through 10, 20, 30 applications a day as the entire world started to realize that all the money's in blockchain. And suddenly our industry got really scammy, a little bit problematic. Everyone was trying to jump into the money grab. And then you started to realize, actually, this is why regulations. as you started to see some of the things that were actually trying to get into the money grab. And so the rewards token was designed whereby we had loads of really committed members that were performing due diligence, and we wanted to reward them for their investor relations work and due diligence work. And so we set about building the platform where we could reward them for when they contribute to the due diligence and provide extra intel that helped our investors. And then we're launching our secondary market and our securities token exchange, and we wanted to allow people that had our token to get discounted trading fees, like some of the models that we've actually seen. So the token actually solved many of the problems that we were experiencing on our platform, and we're still working on that today. We decided, the interesting thing is that we decided to do this because we had some investors from the US. We had to do it in compliance with US securities laws. One of the really interesting things is that cost an awful lot of money to do it in compliance with US securities laws. Let me get my mic again. Hopefully this will be the last one. While we did that, in order to do it, it costs quite a lot of money. You've got to file your Form Ds, you've got to register, all your forms, and then you've got to have this onboarding process that we built, go through our US broker-dealer, and to do this all properly, we had to do all those things. And so we invested in a US broker-dealer that was later sold to Coinbase, and Coinbase are now purchased that in order to try and get into the securities token industry. But the really interesting thing is that we spent an awful lot of money trying to comply with US securities laws and do everything properly and file with the SEC. And in the end, of the $33 million that we raised, that sold out, the public sale sold out in 2 minutes and 17 seconds. Of the $33 million that we raised, $127,000 came from the US. $127,000 of 33 million. And I thought to myself, I'd moved to Hong Kong at this time. We spent a lot of time, when my book was translated into Mandarin, many, many people across China got into Bitcoin for the first time because of the Mandarin translation of the book. And we'd spent a lot of time building relationships across these different areas. I thought to myself, Bitcoin is actually creating disruption in the dollar market. How did the dollar get so powerful? Well, the dollar originally got powerful because there was a Bretton Woods agreement after the fall of the British Empire and the wars. And they managed to negotiate that if you want to buy gold and oil, you have to have dollars. So everyone had to buy dollars in order to buy gold and oil because it was priced in dollars. And then from there, they created Wall Street. And when they created Wall Street, they opened up the largest capital market in the world, where if you wanted to build and exit your company, you had to go to Wall Street. And then they created Silicon Valley, which meant that if you were a startup early stage building technology that was going to disrupt many parts of the world, then you had to move to Silicon Valley. And I thought to myself, well, actually now, what if oil and gold is actually priced in Bitcoin? Well, that's the securitization model that the tokens are looking to actually create right now. It's not quite there yet, but what if? That means a currency that has no connection to any country or political agenda in the world, does not give a damn about your employment, does not give a damn about your tax, does not give a damn about whether you traveled to Syria, does not give a shit about the color of your skin or your sexual preference, could actually become the backbone of many of these assets. And could actually become the currency that's traded against many of these assets. Wouldn't it be great if there was no longer that unfair advantage where you were forcing people to buy dollars in order to buy gold and oil? And therefore, the US has the advantage over the commodity that was meant to be the safe haven, apolitical asset class that people could go to in times of unsafety. Then, what if we do this token process? Yeah, we're talking about ICOs. We're talking about all the people that scam money. We're talking about the people that actually did this in new models that came along, like Telegram, that got $2 billion. $2 billion was paid for by institutions in dollars. And that is then converted to crypto because they issue a Telegram crypto token. This isn't crypto money. This isn't people that got wealthy from Bitcoin, got wealthy from Ethereum, got wealthy from ICOs, redistributing that into ICOs. This is new dollars converted to crypto. And then once they enter crypto, they do not leave the industry. They very rarely leave the industry. Why do you think Tether, in all of its problems, in all of its claims, went from 700 million to 2.3 billion? The reason is because people need to be able to have stability, but they don't want to leave crypto. They don't want to create taxable events. They want to leave their money in crypto, but they need some of the stability and benefits of traditional fiat money. So now we have this dual system. And what if Bitcoin and Ethereum and crypto and stable coins or whatever it is was actually the backbone behind every single asset class in the world? Well, that suddenly means that Wall Street's not so important. And that suddenly means that now the venture capitalists in Silicon Valley, they have gone from, you've got to move to Silicon Valley in order to become a Facebook. Now that's changed. Telegram didn't move to Silicon Valley. Telegram raised finance from Silicon Valley investors in dollars and converted it to crypto. That money's not going back to fiat. So dollars are being sucked up by crypto. ICOs, Bitcoin, and all this stuff is sucking up fiat money and replacing it with these digitized assets. And these digitized assets tend to get traded back into Bitcoin, traded because Bitcoin is the only store of value in this industry. And so you tend to have this whole market that's then sucking money in and replacing it with a new form of money. That's fascinating. That's the first time we've had that. And we are still right at the infancy of that. And so every ICO, as I see it, is once it becomes in the regulated industry, is sucking fiat money and replacing it with crypto. The decentralized ones, the unregulated ones, are giving crypto people a way to redistribute their wealth, and we've created a self-financing mechanism where the crypto industry can now fund itself, independent of banks, independent of Silicon Valley, and Silicon Valley is just one of the participants. And this can happen on a global scale. Now, Gibraltar can come along, Isle of Man can come along, Malta can come along. We want a piece of that action. We want to create a regulatory environment that allows us to suck up as much fiat, convert it into crypto, and we could become the next Wall Street. But it will be traded against a currency that is independent of our politics. That is a net improvement in terms of competition and keeping governments honest. And this has all come from Bitcoin that then created Ethereum. And remember, Ethereum was funded by Bitcoiners. You could only purchase ETH tokens with Bitcoin, and it was pitched to the Bitcoin community. So all this bollocks about Ethereum versus Bitcoin, that's absolute shit. Bitcoin is a store of value. Ethereum is disrupting the capital markets. Completely different things. One's inflationary, one's deflationary. You can't compare the two. They're just not the same thing. And then if EOS comes along and says, we want to do it faster, cheaper, whatever, then that's great. Let's have this competition. But anyway, tangents. I tend to take these tangents. So throughout that whole time, I was fortunate enough to be on the cusp of about 6 different waves. First, you had Bitcoin, which was the value proposition of disrupting central banking and creating an honest, sound monetary policy that allowed you to trade and keep governments more honest in terms of their fiat currencies. I believe in the interoperability between fiat and crypto. Bitcoin is not going to become this currency that everyone in the world is going to go buy a pint of milk for 0.013625887 Bitcoin. Ain't going to happen. But what is going to happen is more and more people are going to take their savings and put it into Bitcoin because it's a deflationary money supply that cannot be changed and is independent of political geography. And the people in Cyprus didn't know they needed Bitcoin until the bank stole their money. The people in Greece didn't know they needed Bitcoin until the ATMs were closed. The people in India didn't know they needed Bitcoin until they were told that they need to queue outside a bank with their life savings in cash and risk being shot and killed with their life savings because the banking system wanted to digitize it and turn the government-created money into bank-created money. The people in Mexico didn't know that they needed Bitcoin until Donald Trump became president and ruined their international affairs and had a 25% correction. The people in England didn't know that they needed Bitcoin until we had this Brexit thing where we self-imposed ourselves into this exit that lost 25% of our currency valuation due to uncertainty in the international markets. But we now got that. So then I was in the equity side. I think this is going to have a resurgence. So one of our campaigns was to try and make equity great again. We think that equity has really great properties. Not everyone wants to invest in utility tokens. Equity serves a purpose. They're different markets. Investing in a network is different versus investing in a company. And I think we can make equity great again by making it tokenized. And I think tokenized equity is better than normal equity. We've got a lot of problems to solve there. And then altcoins came along and created all these alternatives that kept Bitcoin honest. Bitcoin had this dominant force, and it's a very important thing. It's the only decentralized one, in my opinion. It's the only one that's got the ability and the characteristics to be a store of value because there's no founder. No one can take it down. There's no central point of failure. Even the SEC announced Ethereum and Bitcoin are not securities. Why? Do you think they wanted it? Do you think they wanted to control Bitcoin? Hell yeah. They knew they couldn't. They knew they couldn't. And what was happening? America came along and said, holy shit, we're losing our industry. We're losing Silicon Valley. We're losing Wall Street. If 2017 continued, every single stock market company would have delisted eventually from the New York Stock Exchange if we carried on in this unregulated environment and decided to launch tokens. People were, venture capitalists were coming like, how do I get hold of all this money that then I can raise money for my VC fund and then invest in all these different things? And they would just, if 2017 had continued, there was systemic risk in the entire financial system if that had continued. Regulators said, we need to get some control over this. We need to do this before the writing's on the wall. Now, Bitcoin and Ethereum aren't securities because they can't control it, but they can try and control everything else. This is a power play. But it's too late because they were asleep for too long. And Bitcoin became what it is, and Ethereum became what it is because they didn't care. They were too busy laughing at us. But now they're not laughing. And this affects all of those markets. So then we had ICOs and tokens, and then we had hard forks. How interesting was hard forks? I was shitting myself about the hard fork. I thought Bitcoin's going to go from 21 million to 42 million. Does that mean everything I've been telling people about sound money is over? But it turned out, no, it created an altcoin and everyone got free money and the market still prevailed. And if you have a different policy on how to scale Bitcoin, you now get a crypto dividend that is a reward for holding Bitcoin or a reward for holding Ethereum or whatever the hard forks come from. Turned out that this industry is very fragile. And now we got securities tokens. And so that's where we are today. And that's the topic of this whole thing. While BnkToTheFuture will be working on the securities tokens, why not? We've been working on the regulator side since 2010. We've got all these processes. We've got these registrations. We've got these custom onboarding process compliant with securities laws all around the world. And so we announced that there. But at the same time, I do want to remember, and the point of this conference, when people are talking about regulations, I do want to remind you that the regulators were the same people that gave banks the ability to create digital currency, that gave banks the ability to counterfeit the government's currency, and that allowed the financial system to use financial engineering in order to loophole every single system and every single check and control. Every single check and control has been loopholed by the investment banking industry, colluding with the retail banking industry, colluding with the regulators. And now, do you know what's interesting? I think the system's going to attach itself. My forecast of what comes next? I think that central banks are going to create their own digital currencies. Look at it all around the world. Now, people in the Bitcoin industry, as ignorant as some of them might be if they don't know their history, would say, who gives a shit? Who cares if governments create their own digital currency? It's not going to be Bitcoin. But you've got to actually look at what the real effects of this are when you understand the financial system. Think about this. Governments all around the world want to make cash illegal. Why? They want to do what India did. They want to track every single transaction you did. You could look at it on two ways. Either it's their goal to prevent terrorism and money laundering, or it's their way of controlling their people and gaining access to all the data. You can be the activist or you can be the socialist. Take your choice. I'm not here to judge which one's right, because probably both of them are true to a certain degree, depending on the level of government that you're playing. But they want cash to be illegal. And guess what? We have not solved anything from the financial crisis. The exact same problem still exists times 100. You know, the Federal Reserve had something like, I think it was during the crisis, 2 trillion of national debt. I think it was even before that, it was like 750 billion. The numbers just got crazy. And now I think it's something like 4.5 trillion. You know, all we've done is solve the problem with the cause of the problem. So guess what? We still have systemic risk in property. We still have systemic risk in student loans. We still have systemic risk in credit cards. The financial crisis is happening. It's going to happen again. We haven't solved it. But what are the governments going to do different this time? Well, they ain't going to bail out the banks. The public will just not have it. There'll be riots on the street. If we let the banks pay all their bonuses again as a result of this, that ain't going to happen again. They might bail in, but if they bailed in, then guess where everyone would be putting their money? Crypto. If you got bailed in again, where's your money going? Holy shit, I need to look at hardware wallets. I need to learn this stuff. The funny thing is everyone's going to learn crypto at some point in their life. It's just when it will be necessitated. Well, what they're going to do is the government's going to come along and say, we're going to let the banks go bust this time. JP Morgan Chase, bye-bye. Give us the ledger of all of your clients' deposits. And guess what? We're insolvent. The government's still insolvent. Do you think the federal income protection insurance covers those deposits? Hell no. Why do you think we needed a bailout? The insurance doesn't cover it. They're insolvent. But what they will do is they'll create a new money supply. Last time they called it quantitative easing. They leveraged the central bank's balance sheet and perpetuated the debt. But they're insolvent now. So what are they going to do? They're going to create a new money supply, and it's going to be called a blockchain, but it ain't going to be a blockchain. It's going to be a centralized database created by the central bank, and it's going to allow you to convert your bank deposit for a digital wallet at the central bank, and then your money that was created at a bank, the bank goes bust, but you don't lose your money because there's this new money supply that's replacing the old money supply, and it's going to be called a digital currency. And guess what's happening then? The system's fighting itself. The central banks are fighting the retail banks. They're disrupting the retail banks. What are the central banks going to do? Well, they don't want to create branches all around the world like the retail banks. That's why they outsource the money supply in the first place. Fintech companies are going to take that on. They're going to have an API key, and people are going to build on top of central bank currency, and these currencies are going to have to be kept more honest, improve their user experience, because if they get it wrong, people are going to Bitcoin. And that transaction is going to be seamless in the future. All these forces are at play. We're going to have decentralized exchanges, decentralized tokens. They're important. It is important to keep a regulated system honest and have competition. It is important to allow people to own their own money, spend their own money, invest their own money. And then the regulated side needs to improve their user experience, needs to improve how they do things in order to compete with the decentralized. Because people have choice. That's what this industry is creating. Choice. Yin, yang. I've also invested in many centralized exchanges. I believe that the centralized exchanges have a big part in this industry. All that fund manager money, they need an uncorrelated asset. What's the only uncorrelated asset I know of? Well, gold, isn't it? It's Bitcoin. If you want an uncorrelated asset class, and you're a fund manager managing significant sums of money, you are irresponsible if you don't get Bitcoin. Because the stock markets, the bond markets, the funds, everything is all correlated. It will go down together. You need to protect your investors' portfolio. And if they're not doing that, they're irresponsible. What's stopping them do that? Well, they need to do what global custody. They need to hold it in a way because Bitcoin gave the power to the people to be able to control their own assets. And then that gave the responsibility of having to protect your own assets, which means you can get hacked. So custodial solutions are coming along. And what's going to happen to that? That's going to create the next systemic risk event in crypto. All the institutions in the world are going to hold all this crypto on behalf of people, and they're going to become the next Mt. Goxes. And the reason that they're going to do that is because the true power, the end game, is that in some way, shape, or form, people need to learn that they have the ability to own their own money, spend their own money, and have a monetary policy built upon savings rather than debt. And the governments could create stable currency. They tried to create stable currency. The dollar's done a great job of creating a stable currency. But it comes at a big cost, and this is why this is such an important thing. You're going to have regulated and unregulated ICOs. BTCE, the exchange that was used by money launderers all around the world, issued their own token after the Fed took their money. And you're going to have unregulated ICOs, anonymous people around the world raising vast sums of money for things that you might be completely unethically aligned with or ethically aligned with. But it's happening. And you're going to have regulated ICOs. These things are going to be done as securities. But what is the key differentiator? The key differentiator is liquidity. And what's the key differentiator with liquidity? It's traded against a stable coin, Bitcoin, Ethereum, whatever it's going to be. And that means it's apolitical. I believe that Bitcoin will become the world reserve cryptocurrency. At the moment, it's the world reserve cryptocurrency for cryptocurrencies. I've advised many central banks around the world about their Bitcoin policies, and I've been telling them, you are insane if you don't bet a tiny percentage of your country on maybe Bitcoin becoming a big thing in the future. Take a little portion of your electricity and invest it into Bitcoin mining. Take a little bit of your country's electricity, do that. Because here's the thing, Bitcoin is either worth nothing because it can be hacked, it's got all the problems, it doesn't scale or something like that, or millions of dollars. There's no in between. At the moment, speculators are driving down the price because they don't understand the value proposition behind it. But that doesn't carry on for the long term, because the invention of giving you the ability to own your own money, spend your own money, and have a monetary policy based upon savings and debt that's uncorrelated to the traditional financial system and apolitical is a useful invention. And it will be useful to more and more people over time. And so I think you're going to see more and more traded against that. You're going to have securities tokens, as we said, compliant tokens that disrupt. What's the most important thing here? So we are making sure that we've actually invested in many of our competitors in the industry. I don't see it as competition. We're building a whole new ecosystem here that's set to take a lot of money from traditional stock markets. The worst thing we could do in securities token industry is try and recreate the London Stock Exchange, the Shanghai Stock Exchange, the New York Stock Exchange, but on blockchain. That would be the worst thing we could ever do. Either the stock markets will just create their own blockchains, or fintech companies will disrupt them and do something better on blockchain. What we need to do is an industry standard, apolitical protocol that allows people to create these securities tokens and compete for liquidity and honesty and credit counterparty risk with all the different players in the industry. So we're investing in all the different players in the industry because we believe we need to create an entire ecosystem that if BnkToTheFuture's securities token exchange is not producing the liquidity, or they're following a policy, or the counterparty risk is unacceptable, those tokens can leave the exchange, go on their own wallet, store it at their own counterparty risk, or go on to another exchange. That means you create a global vision. What did the stock exchanges do? They created monopolies. They said, if you're a company and you want to raise finance, come to London, come to New York, and you ain't going anywhere else. We cannot recreate that as an industry. We have the opportunity to globalize and give all these different countries around the world an opportunity to participate in the same that America monopolized. And competing fiat tokens. At the moment, you have a choice to what to do. If you want a stable currency, dollars is really pretty much the most important currency in the world. It can be spent more places than anywhere else. It's an important currency because of the way that the political system has gone over time. But then Bitfinex comes along and creates Tether. And all of a sudden, Like it, hate it, you can choose. Do I trust Bitfinex or do I trust the Federal Reserve? What if Gibraltar comes along and creates a stable coin backed by dollars? Well, that might actually create a central point of failure where the Federal Reserve try and exercise their influence over your jurisdiction and shut down those US dollars. But what if it wasn't backed by dollars? And there was just simply a mechanism whereby a cryptocurrency always had a value of $1, or a cryptocurrency always had a value of £1, or a cryptocurrency always had a value of the Singapore dollar. It means that now there is competition for national currencies. Do I prefer the credit risk model of the Federal Reserve, a bankrupt institution that's perpetuating a Ponzi scheme? Well, maybe I do prefer that over Bitfinex because there's some unregulated thing outside environment, but maybe I don't. Maybe I prefer Gibraltar creating their own one, or Japan government creating their own one. There is now competition for national currencies as a result of this industry. That changes everything. You can gain access to a government's monetary policy without owning that money. If we can get this right, this is all coming. It's early stage. There's going to be casualties. We're going to lose our money. There's going to be scams. There's going to be problems. But this is the most exciting time to be alive in financial history. And it all came from those bunch of geeky people that got together and said, let's create a peer-to-peer digital cash system. There's much politics in our industry. I think we've been fighting with each other for too long. Bitcoin Cash versus Bitcoin, bollocks. If someone wants to optimize for digital cash and wants to optimize a competing way of scaling, go for it. It ain't Bitcoin. If someone wants to create off-chain scaling and allow us to do hundreds of millions of transactions per second and think about a bigger picture than big blocks, go for it. But the important thing is that we now have competition across all these different areas, across all these different industries, and everybody in this room today, you are still right at the beginning of the early adopter phase. I remember throughout this whole thing, when Bitcoin hit $10, everyone told me, it's too late, I missed the boat, damn, I wish I was around then. $100, too late, missed the boat, damn, I wish I was around then. It crashes back to 10, oh, is it, I'm not going to buy that, no way. What's happening right now? There are so many people last year that came to me, shit, Bitcoin, $20,000, it's too late, I missed the boat. If I only was around back then. Well, Bitcoin's $5,000, where are they? Shit scared. This is a long-term game. And it's the reinvention of the financial markets on so many levels. And it's a really exciting place to be. Okay. So thank you for your time. I hope that puts out some thoughts. So throughout the rest of the day, I'd like people to challenge. Yes, we're moving to a regulated environment, but we also need the unregulated environment, and the two need to compete. We're not just here to suck up to regulators. We're here to do things in line with their regulations. But remember, we need to regulate the regulator too. Thank you very much.